Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me in the Simply Stocks. And I'm live with another live session with you all, as promised around 1 p.m. So, hopefully, you are doing well in your trading and investment, and your journey of investment and trading is going pretty well. Uh, I hope that you all are now aware of the fact that the way the market is behaving and the way the market is shaping up. So, what we have envisaged or we had envisaged by April, May is playing out at the moment. So July has been pretty decent. Yes, it hasn't been a runaway rally, but things look good. So I'll discuss about the markets in detail. Plus, I'll talk about a very interesting thing that not many people realize, or probably some in the investment periphery might realize, but overall, in the context of the overall country, many people do not realize as to how these companies just eat up profits and end up making a lot of profits later on. And what are these companies who make a lot of profits in high inflationary environment? So we'll discuss about that in detail. This is a very interesting topic. So hopefully whoever watches this later on should also gain from it. Kindly do subscribe and like the video, subscribe to my channel. And so let's begin the session. And the first part of this session would be with respect to the market, and the second part will talk in detail about these companies, which are these companies which really make a lot of money over years if inflation persists, etc. And then we'll answer your queries as well. Danish, a very good morning to you. Abhijit, hi. Sagar, we'll talk about stocks later on. Mohammed Ismail, walaikum salam. Deep, hello. Priya, very good afternoon to you. Actually, it is afternoon, so afternoon to you all. Uh, and thanks a lot for all the support, Miss Priya. You have always been on my live sessions, so thanks for that. Uh, Good afternoon, Shiv Kumar, as well, and hope more people join in. Although it is a Thursday afternoon, you all would be working at home. One line about this is that I have always preferred doing business, and thankfully, by the grace of God, I am into a section of a system in which I can govern the way I am, you can say, working, etc. And I hope you all, if you are in a job, be more comfortable in that, or end up doing some very successful business, or some venture in that field that would also help you a great deal over a period of time. So as I understand, it's a Thursday afternoon. It's a time of people being in office, so not many people might join in. But next 3 4 minutes, I'll just spend on the markets, and then we'll come to this very interesting topic of which companies really make big money during this period of high inflation. So as far as the markets are concerned, doing reasonably fine as expected. As I expected, the July will not be very bad, and that is exactly what has happened, what has it culminated into. Probably for this week things will be fine, but from next week onwards we'll see some sort of a decline beginning, and August might not be great. Over the last 11 years, what I've seen is, except for 1 or 2 years like 2021 was good, normally, August as a month has not been that great for the market, and so I feel August could be that month of a gut wrenching fall in the market because there will be more rate cuts. So, if you want reasoning for that, I'll give that, but I firmly believe that when you invest or trade into the market, it's a basic game of greed and fear, and at the moment, yes, there is no greed, but there is no absolute fear. There is a sense of, you can say, calm in the market. The fear would set in once 15,000 gets broken. So we can see 8 to 10% decline over the next 2 months. That is by end of September, early September, or something like that. And then I would really prefer a big rally. So preferably speaking, although we don't know what lies ahead, but preferably speaking, a big bull run is expected once the market breaks 15,000 and goes closer to 14,000. Then you could see a 50%, 50, 60% move. on the Nifty over the next 2 years. Otherwise, we could be just range bound for many months, at least for 2 3 months or so. So the market per se should do well at least for a week, 10 days, and then at least it will do reasonably well, and then the big decline would happen. So that's about the market, and then your mid cap, small caps, everything will fall, and eventually there'll come a time where most of the people would throw in their towel, and that is the time of high panic when your you can say India VIX would be at 28, 30, 32, and all this times, and then you'll just compare that with the television commentary, etc. You'll understand that what kind of panic sets in at a VIX of 32 or 34 or something like that. So we'll have everything combined at one point of time, maybe end of August, maybe mid September or something. And then the big move, as I have always explained, could happen in the festive season. And those 6 months could be big. And over the next 18 months from October onwards could be huge for many of the companies if somebody can keep patience. So that's about the market. Let's come to the moot point that I wanted to discuss. So basically, there are a set of companies that do extremely well, and probably I would say some even wait for these kind of situations where high inflationary pressure sets in, because over a period of 7 to 10 years they make a lot of money. And I understand that most of you would have understood the set of companies I'm talking about. You can write in the comment box while pausing the video. You can write in the comment box if you are watching it live as to which set of companies I'm talking about. I'll give you 30 seconds for that. But these set of companies, just to give you a hint, uh, continuously have high ROEs, they have high PE, high ROEs, and they produce a lot of, they are cash rich companies. They are not companies which are, you can say, debt laden, etc. So these are some of the hints, and hopefully most of you would have understood. I'm talking of the pure consumer plays or the consumer companies. I'm not talking of the FMCGs only. FMCGs are included in here, but all sorts of consumer centric companies which raise prices during, you can say, uh, inflationary period and don't come back to their previous prices. So have you heard about, say, even a Maruti increasing its prices of its Baleno or other cars at Sex Swift Desire and so on and so forth, and then reducing the prices when the input cost has reduced? That never happens. Or if the oil goes back to $60 per barrel, will your refine oil cost lower? Maybe it will cost lower by 5% or something, but it won't come back. So a refined oil which costs something like 120, 130 rupees, say 2 3 years back, will not cost 150 rupees again. I think it will, from 200 rupees it may go to 220, come back to 180. So that's where the margin is, that's where the money is. So you have to understand, being in the market, that is the edge for every individual who is in the market, who understands about the economics, may know as to where things are, you can say, skewing towards. So what happens is, all these companies, whether they are paint companies, whether they are shoe companies, they are lifestyle companies, they are your beauty brands, uh, your automobile companies, you have your FMCG companies, your whatever kind of products you have, baby care products, you have baby food products, milk products, etc., chocolates, ice creams, biscuits, so on and so forth. All these prices go up, and then they remain stable, and then they go up again after 5 6 years. So what happens is, inflation do not, as with other things as well, inflation do not rise in a similar manner. These inflationary pressures come in a wave and then they go away. But why do they go away? They go away because the raw material prices come down, because the oil prices come down. Now, why are interest rates getting higher for each government? Basically, they want to raise interest rates to reduce the input price cost, to reduce the cost of steel, metals, all kind of oil, etc., or inflationary pressure on infrastructure, real estate, and whatever inflation is there in the economy. They want to reduce that inflation all over the world, not only here in India. Now, where this inflation will get reduced, it will not get reduced that much on the main consumer stocks or consumer companies or the brands. It would get reduced for vegetables, it would get reduced for open milk kind of products, or it will get reduced for metals. And that's why metal stocks have got a hammering over the last 2 3 months since April. And I've been talking about it since last June, July, that probably metals peak has been found, and that was last July, and this has been 1 year, and the stocks are falling, and they'll continue to fall. So basically, what happens is these kind of companies, the Nestle's of the world, Asian Paints, Pidilite, Britannia, you name it, HUL, Godrej. And any company, Gillette, etc., or even companies in other sectors which are consumer oriented, wires, cables, electronics, etc., all these kind, lighting, all sorts of consumer companies will raise prices once, they will take the hit. So you'll see a DMart, for example. Look at the results of DMart this time around. So, for example, a DMart came out with a very subdued results in December, and it was thought to be a pretty good quarter because of the festive season, etc. And the stock got sold off from January onwards and all. And during sorry, the results came out in February, and from there on in, the stock got sold off. Then the March number came in and the stock did not move, even sold off even more. Look at the June numbers, the way it has. So they took in the inflationary pressure for 1 or 2 quarters, and now they are reaping in the benefits. It would be more visible in companies like Asian Paints and Pidilite. So what has happened is Asian Paints and Pidilite has had a very subdued quarter. I won't say very bad quarter. These are a couple of stocks I'm holding in my portfolio. I keep on adding. So that's a disclaimer. But in these two companies, what has happened is their margins have shrunk sharply. Now, what will happen is they will slowly just keep on taking price hikes for 2 3 quarters. And you will see from FY24 onwards the kind of numbers they'll produce, and everybody will be surprised. They'll beat the street, they'll come out with very exceptional numbers, and eventually the stock will just zoom probably in FY24, and by 2025 you'll see the stock probably double from its level of 2022. So again, a doubler in 3 years kind of a thing. And then everybody will talk about, okay, Pidilite, Asian Paint, they keep on growing 20 22% and this and that. But why does that happen? This happens because of Fevicol's price, when it goes up by 10 20%, it doesn't come down even though the input price come down. So what happens is they take in the losses initially for 2 3 quarters because of higher input cost, higher raw material cost, etc., whatever that is coming in. And then later on, when the raw material prices come down, which are coming down for steels, metals, etc., but you will not see, if the steel prices are coming down, you will not see car prices come down. You will not see chocolate prices come down if the sugar prices come down. You will not see other milk product prices, say baby food products and all, prices come down if the milk prices come down. So that is the issue. That is where the issue is for the common man. That is where we have to make money as an investor or a trader. And that is where I'm saying that this is the time to buy into consumer centric companies. Even if they go down in the next 2 to 3 months, these are very decent levels to buy into something like a DMart, an Asian Paints, a Pidilite, a Britannia, a Dixon, a Polycab, an Astral, uh, uh, anything in mid cap, in large cap, Bata, etc. Any shoe company you take, in Berger Paints, others. I mean the sectors. These sectors, if you can hold 2 years, 3 years, will make you a lot of money. I did not talk about this sector, say 2 months ago or 3 months ago, but now it seems like over the next 2 to 3 months, companies in this sector can be accumulated. And that's why I was so excited to talk about it, because these companies will not reduce prices, will not give back to the normal consumer. These companies will just eat up the difference and will not reduce prices. And eventually people will get used to it. Everybody has to use all kinds of products that I'm talking about. And then what will happen is these prices will not rise, but they will not fall either, although the input costs have fallen. So what will happen? The margins will increase, and margins will exponentially increase over a period of time. So basically, this is where pricing power comes in, this is where leadership comes in, and this is where companies like Asian Paints, companies like Tata Motors or Maruti, companies like Pidilite in one sector, or Dixon in the other sector, or Polycab in some other sector, or the market leaders in each space will keep on making money. So more than trend, probably DMart will get benefits of all these things, and that's why you have to stay with market leaders. They will have higher margin expansion. They will have higher growth in terms of stock price as well, and that is why, and they would have fallen less as well. So that is why you have to stay with leaders. So that is the crux of the thing, that whenever there is higher inflation, these companies make a lot of money, not initially, but over a 4 5 year period, or at least over a 2 3 year period. Then over a 10 year period, it becomes even bigger. So stay with, even with the mid cap companies or small cap company or multi baggers you're trying to find, stay with companies which have pricing power. If you can find those in smaller companies, you will make a lot of money in these stocks. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. And also, if you're not able to take Patreon membership, you can take WhatsApp membership. You have to email me for that. That's an yearly membership. In that regard. Okay. So DMart, in my opinion, Priya, I believe that 3200 has been the bottom and that has been made. Although I feel that 32, 3300 could be found again. Every stock, all stocks, in fact, this market itself may just test its lows by August. So be patient if you want to add. Probably around 3300 would be better levels to add the stock. And this stock is going to do extremely well over the next 3 years. Okay. Any suggestion in the pharma sector? I believe Loris now is looking much better, so that's one call. Divi's has fallen a lot. I still feel Divi's lab is something can be held on from a 3 4 year point of view, but again, do your own research and take your own call. Ravi, thanks for your contribution. Adani ports at current price. What is your time frame? If your time frame is very short term, say 2 3 months, then don't buy. Let me just open up the stock and I'll let you know. So just opening up Adani ports on the technical charts, and we'll let you know. Uh, but I would prefer more consumer centric companies even for trading at this point of time, the way they have fallen. So as I see Adani ports, it is trading at something like 723, 720 or so at the moment. Very weak on charts. That's one thing. It's trying to show strength, but it is weak on charts. I would say that you can get into the stock on a move at 730. If it moves above 730, then you can get into the stock with a stop loss at 718 and a target of 800. That's my call on that. Both are good from long term, L&T, Infotech, and Dr. Lal, and these are good levels to get in. Again, companies that should do well once things normalize completely and open up completely. L&T, Infotech, and all IT companies will do well once this interest rate hike cycle ends, and that would take, I mean, at least 3 4 months more from now on. In probably October, November or so, you will see these move big time. So both are good to buy at these levels. Ravi, if you have 2 years time frame, you can hold with a deep stop loss of 680. That's my call on the stock. 680 is your final stop loss and hold the stock. Not a huge fan, Binoy, of Supriya Life Sciences. I would say stick with the larger pharma companies. See, the US FDA reviews have started, so you don't know where the bomb could just fall on which company. So it's better to stay with the big wigs and the better companies rather than the smaller ones. Sigachi, a disclaimer: I have the stock very positive on the stock. We'll see how the numbers pan out, but at these levels, it looks very attractive. My opinion is that in FY 23, the EPS should be closer to 17 rupees. FY 24, we could see even 24 rupees. So it's trading at very attractive levels at around 270 280. Sigachi. HDFC, you can accumulate even more. These are two companies in the financial space that I like, apart from Bajaj Finance as well. So that's three: HDFC, HDFC Bank, and Bajaj Finance. These are the three. American thinks Russia to get them American and don't feel that way. I have no clue what you're saying, but you seem nice. Thank you. Thanks a lot. So Mastech, in my opinion, Mastech is very attractive at around 2000 1900. I don't know the reason why it has fallen so much, because the kind of numbers it is producing, it doesn't deserve to be here. But that is the kind of market we are in. A disclaimer: I have the stock. I still believe at current levels, at 98 rupees of EPS, it should give an EPS of 123, 125 rupees for next year. Based on that, it's trading at very interesting levels and should trade at minimum 3000, 3600, 35, 3600 in a 6 months time. So there's a lot of you can say a move possible, 80% from current on in a year or so. It's a 2 year hold Mastech in my opinion. So that's my call. Just hold 2 years and you'll see the stock perform. Coforge can be bought from a 3 year point of view. I think these IT companies or IT stocks at these levels are a steal. Most of them are something like a TCS at 3200, 3000, and all those levels. I mean, these are very good levels to get in. The PE of these IT companies have come back to, you can say, 2020, early 21 levels. They are not expensive at all. People are talking of the fact that they had become extremely expensive, so they'll keep on falling. I don't think so. I think numbers have improved sharply, and numbers are improving big time. 30 40% growth, in some cases 60 70% growth. And the companies cannot trade at 20 times, 25 times, 15 times. In that sense, yes, IT used to trade at 18 to 20 times earlier, say 5 7 years back, but things have changed. Demand has picked up big time. There's a lot of order books, so I feel they are extremely undervalued, IT companies. So that's the call. I think Delivery is a decent company to buy from 5 year point of view. All these kind of new IPOs, rather than just trade into it or even buy from thinking like 1.5 years, I won't say that. I won't suggest that you buy into them from that perspective. So Delivery, the business is good, margins are good, return ratios are good. It's expensive. That is the thing. The stock is expensive, so you can accumulate and hold 3 to 5 years. MTAR Tech looks attractive, but what you need to do is just accumulate with 3 4 tranches. So buy 25% at these levels, buy 25% more at a 10% move, and keep on doing that. Have a good average and hold 3 to 5 years to make money again. So the companies you have mentioned are not growing that well, and that is why they are trading at 17 18 times. I'm talking of mid cap IT space, which is doing extremely well. So something like Wipro, HCL Tech, or Tech Mahindra, I won't like to buy them. I won't even like to buy Infosys even. I would like to buy something like a TCS or other mid cap companies, only mid cap companies or small cap companies, which are growing pretty well. There is a company that is into the EV space. Disclaimer: I hold that stock, uh, and it is trading at something like what it is 50 times, but growing at 50 60%. So it should trade at 70 80 times because it is growing at 50 60%. There are companies that are, so for example, people talked about, or there was a question about Mastech. It is growing at 22 23%, trading at 17 times, 16 times. It should trade at 30 times easily, 30 35 times. So you have to find value first and then get into them, rather than buying into companies growing at 7 to 10% and trading at 20 times. That's the goal. Trident, I would say just an avoid. So that's my call. Birlasoft, again, another attractive company trading at 17 18 times. Are not that attractive as something like a Mastech, but yes, around 330 to 350 looks pretty good to buy from a 3 year point of view. All right, guys. Thank you. Thanks a lot for being online. We'll be online again on Sunday to talk about markets and everything. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. And kindly do subscribe to my Patreon network. Thank you.